All right, here we go. Audio 1 2 1 2 1 2. Can everybody hear me? If you can hear me, give me a yes in the chat box. I know Jeanette can hear me. Now, if you guys can give me a yes in the chat box. Now, I'm still a little bit under the weather. I'm sucking on Halls over here, and I've got water. I will probably cough right in your ear. I'll try my best to get to the cough or the sneeze button. No promises, though, but I will power through it for you. All right. All right, I'm going to lead us off here. And what I'm going to do is I'm going to walk through the basics of Ichimoku. I don't have anything for you to buy. All I'm going to do is I'm going to walk you through exactly how I use one aspect of Ichimoku, okay? And then what we're going to do is we're going to scan through the markets, through all the futures markets and the S&P 500, and then we'll look at the markets in real time, okay? So it's going to be half and half. It's going to be 50 education, 50, this is how I really do this stuff, all right? All right, so welcome to this live event. Let's get started. So first, warning disclaimer, never trade with more money than you can afford to lose. Odds are you're going to lose a lot of it trying to figure out how to do this business we call trading. The definition of trading is not guaranteed cash flow with zero risk. That is not the definition of trading. So there's going to be a lot of losses when you initially figure out how to do this stuff. So never trade with more money than you can afford to lose. Very, very important. All right. Now I'm going to skip most of my background because I don't really think it's that important. Hopefully you know me. If you don't know me, I'm just a guy that trades and owns a lot of different businesses. All right. So I used to be poor, and then I made some money, and then I lost some money, and now I made some more money. Pretty simple story, right? Okay. Congratulations. You're in the right place at the right time, and here's why. So just a show of hands, are you more of individually in the webinar room, do you trade fundamentals or technicals? Which one do you kind of gravitate towards more? And I think it's a really good way if you combine the two. I would probably never just go fundamentals. Just fundamentals doesn't make a whole lot of common sense to me. Just because I've seen fundamentally companies go to zero, and I've seen companies that make zero cash go sky high. So it doesn't make a whole lot of sense to me just to be fundamental. So most of you are technicians. All right, cool. Well, that's great because this is a technical indicator. Now, this is a free indicator. All right. On almost every platform out there, it is free. It will not cost you a dime, but you will need to know how to use it properly. Now, this works on stocks, options, futures, Forex, bonds, gold, commodities, and crypto. So it works on a lot of different stuff. Now, it does work. Here's that little nagging cough I told you about. It does work on some things better than others. And you're just going to have to test it and play around with it in order to figure out what that is, okay? All right. So what time frames do these strategies and tactics work on? They work on both day trading, swing trading, and investing. I'm in Amazon at $75 thanks to this indicator, okay? I routinely trade bonds and index futures, day trading this thing, and also swing trading. Will this work on swing trading? Yes, or on the Indian stock market. Yeah, it'll work on any market out there. So you should be fine. All right. Now, this will be a different presentation, but in a good way. So like I said, I'm going to go through some of the basic concepts of how I use Ichimoku. There are tons of different ways that you can do it. These are some of the ways that I found work for me. And I'm going to go through one specific trade. And then what we're going to do is after I teach you that one specific filter criteria, then we're going to go through every individual market and all the stocks in the S&P 500. And then we're going to make a watch list. And I'm going to walk you through how I do this day in and day out. It doesn't take a lot of time. Initially, it's going to be a little bit confusing, but I'll break it down in its components. And then we'll simplify everything. Go, okay, here's all I'm doing. Above or below the cloud, scanning. And then I'm putting stuff in little baskets. And that way I know that if we're going to have a down day like we're having today, all right, I need to stay on the short side. And I know what I need to short, okay? All right. S&P 500 results over the last 5 years. Stocks in the indexes, it has worked on over 430, well, not over 430, exactly 430 of the 500 stocks in the S&P 500, which is a hit rate of about 86%. So that's pretty good. Now, if you have taken every single signal, in other words, where is my little pen here? Let me get a little righty gadget. Think. If you would do the long, the short, the long, and the long and then the short, in other words, every single trade that you would have done on that one. Screen is up. I should be sharing my screen. Everybody should see it. If you don't see it, log out and log back in. You would have got a return of 33%. Now, if you'll filter out the counter trend signals and only follow the ones that are in the trend of the market, then you'll increase your rate of return from 33% to 79%, which is a lot better. And you're going to use a 3-bar confirmation to do that, all right, across all the stocks in the S&P 500. All right. It's also been profitable on 29 currencies over the last 10 years using a daily, an hourly, and a 10-minute time frame. So those are my preferred time frames. Now, we're on to one of the most important slides in the presentation at this point, and my little righty pen thing is not working. I don't know why, so I'm going to have to figure out how to make this work. You're just going to have to follow my pointer. All right. Does everybody see my pointer where it's on a daily chart right here, or a daily time frame? Now, if I'm looking at a daily time frame on a chart, then I know I want to be in that trade for weeks. My time horizon is going to be for at least a week or weeks, okay? And the cloud is going to extend to the right of the chart 20 to 30 days. If I'm looking at an hourly chart, okay, what is the instrument called? What is it? I'll get to it. All right, if I'm looking at an hourly chart, then I know I'm going to hold my time horizon for the trade is going to be days. 2 or 3 days, could be 23 days, right? Minimum I'm going to hold is 3 days. If I'm looking at a 10-minute time frame, then I know this trade is going to be good for hours, and the minimum the cloud's going to extend to the right is 2 to 4 hours. Does everybody follow me so far? Who does not understand what I just covered? Because if you miss this part, you will be confused for the rest of my presentation, and you will ask a lot of questions, and you really don't have to. So does everybody understand a daily time frame? When I'm looking at the chart time frame, no matter what instrument I'm looking at, whether it's stocks, options, futures, forex, bonds, currencies, cryptos, if I'm looking at a daily chart, it's going to give me my trend for the next few weeks, all the way up to a month. If I'm looking at an hourly time frame, this is going to give me the trend for the next 3 to 5 days. Okay. If I'm looking at a 10-minute time frame, it's going to give me the trend for the next 4 hours. All right. All right. So let's go on to the next slide. All right. This is what you want. This is the #1 technique used in Japan. There's this best-selling book. It's been a trading book for the past 7 years, and it's a #1 bestseller. And that's the #1 technique in that book. You're going to know exactly what is happening in seconds. It's going to give you really clear signals that produce really, really, really crystal clear trends, whether it's up, down, or sideways. Now, when we're looking at this stuff, we're always going to be asking ourselves, is this a hell yes trade? Okay. Now, it's either going to be a hell yes, this is a great looking long, hell yes, this is a great looking short, or, oh dear God, I don't know what that is, right? So if it's a maybe, it's a no. If it's a no, it's a no. So what we're looking for is we are looking for hell yes longs and hell yes shorts. We're going to skip everything else, all right? All right. Now, this is the edge for you now. It's going to give you, how many of you in here have used indicators that have shown you what happened in the past of the price action? Almost every indicator will do it, right? And you're like, well, that's worthless, right? You're like, well, it just showed me what happened in the past. That doesn't mean that's what's happening now. It also does not mean it'll give me a projection or any future projection of what might happen. How many of you have used indicators that are currently telling you this is what's happening right now? There's a few of those out there that are decent at doing that, right? There's a ton that'll tell you what's happening in the past. There's a ton that'll tell you what's happening in the present. Very few are halfway accurate at predicting the future. Here are 3 good ones, in my opinion. Fibonacci's, Elliott Wave, and Ichimoku. Today, we're talking about Ichimoku, okay? Now, Fibonacci's takes a little bit of practice figuring out which high and low you're going to draw off of. And, dear God, Elliott Wave takes even more practice because first you have to be able to count to 5 and then 3 inside of 5. And then you got to make sure that is this an up wave, a down wave, an alternate wave, an ABC. It can just be confusing if you don't get some really good education on it, all right? So the thing that I like best about this one is Ichimoku is a little bit simpler and easy to use after I teach you this after the first 10 minutes. So do you see a black chart with candlesticks on it with a blue ribbon going through it from the lower left to the upper right? I usually have my pen, but whatever reason, my pen decided it is not going to work with us today, so I'm not going to be able to work with it. So I'm going to just use my mouse. All right. So the first concept of Ichimoku Whatever you're trading, in this example, it's just an old chart of the S&P 500. If it's above the blue thingy, it's a long. Okay, we're bullish. If this price action on this chart is above the blue thingy, that thing's a long thingy. We want to stay long and stay bullish at market. If the price action drops below the blue thingy, which is called the cloud, so this is how we're going to learn this stuff. So everybody type in cloud, C-L-O-U-D, into the chat box right now. C-L-O-U-D. And you'll take notes here as you're going. All right, this blue thing is called the cloud. It's going to act like real-time support and resistance in both past, present, and future. Okay. Now, above the cloud is bullish. Below the cloud is bearish. We're going to try to always keep that in the back of our mind. All right. Now, so what we're going to do is the second theory here, above the cloud is bullish, below the cloud is bearish. The support of the cloud is going to act like a nice little fluffy cloud here and bounce off of it, or a mini trampoline. You see where my mouse is? Bounce, bounce. That one didn't work too well. Nice little fluffy cloud, bounce, bounce, and then bounce. Everybody got me so far? Pretty simple so far, right? So we're going to say, hey, as long as this thing stays above the cloud, it's going to act like a trend line. We're going to respect that. Now, we got a couple other components that Ichimoku is comprised of. This little yellow thing is called the turning line. So everybody type in T-U-R-N for turning line. T-U-R-N. So we've got the cloud here, and this is the turn line, T-U-R-N. It also can be considered a fast midpoint moving average. All right. It's not a moving average. It's a midpoint moving average, but it's not just a moving average. And it's a 9 period. So this is going to be really, really fast support. I per se don't trade off of this thing that much. I usually trade off the standard line more. But what you'll do is you'll look here. All right, if it breaks the yellow, it could potentially go to the cloud. But there's another step inside of that thing. So we got cloud, we have turning line, and then we have standard line. So on the standard line, everybody right STD for standard line. STD. I'm going to get up and walk around here. Give me just a second. I'm tired of sitting already. I'll raise my desk up here and so I can talk to you better. All right. So we've got the standard line. This is a 9 period. This is I think a 26. Okay. Now, if the yellow line gets broken by the price action, it has a really good chance of going to the purple line. Okay. So if it breaks the fast line, it's going to go to the medium line. Okay. If it breaks both the fast and the medium line, then it's probably going to either go to the top of the cloud or the bottom of the cloud. So as you can see here, while we're going through that, we can still look at the overall up or down trend of the market, but we can have minor trends within that major trend. So we do still have a major trend that is an uptrend in that example there in April. All right. So we're above the cloud. We should still be long. Oh, hold on. We're breaking the yellow. We're breaking the purple. That means we're probably going to pull back to here. So we can wait for a pullback to buy either at this point here or that point right there. Does that make sense so far? Now, it will also do touch and goes. It'll go like this, like, all right, we're in a massive uptrend. We're above the cloud. We're above the turning line. We're above the standard line. We've pulled back to the turning line, touch and go higher, touch and go higher. That's another trade that you can do off of this thing. So as you're looking at the chart, it should be blatantly obvious to you. As soon as you look at the chart, you're like, oh shit, that's a great looking long, right? Or you definitely wouldn't look at that and go, ooh, this is a great looking short, because it's not yet, right? All right, so the last line is going to be called the lagging line. So in your chat box, type in lagging line, L-A-G. L-A-G. All right, those are the 4 main components of Ichimoku. So we have the cloud here. Is the price action above the cloud? Yes, we want to stay long. All right, is the turning line supporting us? Yes, we can do touch and goes. If the turning line gets broken, and it will, all right, then the next place we're probably going to go to will be the standard line at 1909, okay? If 1909 gets broken, then we'll go either to the top of the cloud or the bottom of the cloud. Now, somebody asked earlier, how does it project? Well, this is 20 spaces to the right. So this is projecting, saying that the trend is about to go flat. See how it's flattening out a little bit there? The angle of attack is not as aggressive as here. So it's starting to flatten out a little bit, but it's telling you like, hey, when I do sell off, I'm probably going to go here and then here and then bounce back off of that. So what it allows you to do is have, this is what happened in the past, this is what's happening in the present right now, and this is what's going to happen in the future. Now, the transition is the really, really important part, and I'm going to show you how you could have caught every single move to the downside and how we were able to help our members catch some really good moves to the downside as soon as it went below the cloud, because none of this is hindsight stuff. It's going to look like it at first while I'm doing these PowerPoints, and then when I show you the live charts, I'm like, oh God, that works really good in real time. All right, so there's a bunch of different definitions that we need to cover, so let's cover those really quick. The turning line is the midpoint calculation where you take the high and the low of the last 9 days, and then you divide those by 2. So this is just a different chart. So as you can see, this is a relic chart of Apple. So you can see we had a massive long here in Apple, topped out right here at about 700, and then Apple went below the cloud here. You see this? That's going to be a really, really good short, and we're going to hold Apple short in this example until we cross back above the cloud. So in this case scenario, we have an up cloud, a down cloud. We're above the cloud here. We're below the cloud here. And then this line right here, the red line, is the one closest to the price action right here where my pointer is right now. That one right there is the turning line. And that's the one we're calculating right now. The turning line is the red line. We're going to take the price action. We're going to count 9 bars. We're going to locate the low plus the high. You're going to add those two together, basic math, and divide by 2. Now, you don't have to do any of this. Every platform out there does it for you. Okay? So it's super simple. And it's going to tell you that little red line in the hash mark over here is 450.07, which is the same math if you do it manually the hard way, right? So right now, if we're below the cloud, is that a short or a long? That should be a short. We're going to let it rally into overhead resistance, which is the top of the cloud. And then as it's rolling over, if it breaks the 450.07, which in this example, it should, all right, then our next target is going to be the bottom of the cloud here. And then our second target is going to be that standard line, which is going to be 425.42, which is right here. So we're going to short it here, tight stop loss, target 1, and then target 2. Now, that green line is the standard line. And that it's the midpoint of the high and the low of the last 26 sessions. You're going to take them and you're going to add those together, and then you're going to divide that by 2. That number is your midpoint. So it looks like this right here. The little green line is the one second closest to the price action. So you got price action right here, turning line here, standard line there. We zoom in here. We see there's the green line. There's today's price action. We count back from 26 all the way to 1. We have to take our average 26 bars. We're going to locate the low plus the high. We're going to divide that by 2. That's going to give us 425.42. And then it's going to automatically do the calculations for us. Remember, when we said below the cloud is short, we're coming from below the belly of the beast, right? It's going to run into that. Boom. Roll back over. So if it breaks the turning line, then it's probably going to go to the bottom of the cloud and then the standard line. Does everybody understand so far? Let's go to cloud spans. Now, cloud spans are a little bit harder to calculate. They're not difficult. You don't have to do it. The indicator is going to do it all for you. You're going to take the turning line and the standard line. You're going to plot that. You're going to look for the midpoint, and then you're going to future project to the right 26 bars. Same thing back here. Turning line, standard line, midpoint, project in the future 26 bars. It's going to give you either the top or the bottom of the cloud, depending on where you're drawing from. Cloud span B is a little bit more time involved, 52 sessions. So what you're going to do here is you're going to go, this is session 1. This is session 52. There's the midpoint. And what you're going to do is you're going to shift that forward into the future 26 bars. That's what's giving you the fluffiness of the cloud. All right. Are you going to be looking at current trades today or just old stuff? Yes, I said that earlier. I would be going half on education and half on actual scanning. All right, lagging line. Lagging line is the price close shifted 26 bars back. So what we're going to do is we're going to look at the price action right here. We're going to zoom in, and then the price action is going to be shifted back 26 bars. That is the lagging line. All right, Ichimoku cloud chart signals. Lagging line crossing the cloud. price crossing the cloud. These are all signals that you need to pay attention to when you are using Ichimoku. So lagging line crossing the and lagging line touching the cloud spans crossing, the turning line crossing the standard line. Those are all really, really good signals that I think you need to pay attention to. Now, the one I'm going to teach you today is the one we're going to focus on the most is when the price action crosses the cloud. So I'm going to skip this first one right here because it's not that important. So I'm going to go to the second one and I'm going to go right here. You can see how we've got 1, 2, 3 closes below the cloud right there on Apple. Well, that's when we're going to short Apple in that example. And then we're going to hold it until we get 1, 2, 3 lines back above the cloud. So one cross would be aggressive. In other words, one candle closed below the cloud would be an aggressive short. 2 would be a midterm, and then 3 would be a conservative setup. You can wait as many as 3 to 5. I probably wouldn't let it go past that because then you're going to start missing moves and stuff. And 1's a little bit aggressive, sometimes even for me. So we always use the rule of anywhere from 3 to 5 bars below the cloud are good to go. But if you want to do 1s, you can do it too. So I'm always scanning for the close above the cloud or above the cloud, above or below the cloud by 1 bar. All right. All right. Let's skip this because you don't need that. All right. Bullish signals. Price above the cloud is bullish. Price in the cloud are bullish if they come from the bullish side. The lagging line and the lagging line crossing the cloud is the main signal of trend change, but it's very slow, so you got to be careful. Price crossing the cloud is an earlier but less reliable warning of trend change. Okay. Price and lagging line will often find support at cloud's edges. Cloud spans crosses may be signs that the trend is about to change. Be on the lookout for thick clouds after runs, which could mean a trend is about to change also. So those are the bullish signals. Now, I know I'm about to cough again. So what I'm about to do here is I'm going to let you read this slide. Once you get done reading this slide, these are the bearish signals. They're the exact opposite of the bullish. Just type in done, ready to go, okay, whatever, and we'll move on. Because now I'm getting ready to switch to the live charts. Oh, I need another Halls. I don't know about you guys, but is anybody in here? My personal version of hell would be to be stuck in a mall right now. I mean, that shit would drive me absolutely bonkers. All right. Looks like we're getting a few of you. Give you a couple more seconds here. That's why I'm here. Exactly. Loud noises, crowds. Ooh, gives me the heebie-jeebies. All right. So that is the bearish signals. All right. Time frame selection. Once again, daily, hourly, 10-minute are my favorites. It doesn't mean they're the best. There's no such thing as best in trading. There's what you can actually get yourself to accomplish on a day-to-day basis. All right. If you want to go smaller, you can go smaller. If you want to go higher, you can go higher. All right. So let's take a look at, get off here, a little thing. All right. Multiple time frame analysis. We're going to be using daily, hourly, 10-minute. For the rest of the presentation, I'm just going to be doing live stuff with live charts. All right. All right. Let's see here. I'm going to exit out of here. All right. Do you see my trade station right now? You probably should see it. It's 9:27. The market is about to open up here in 3 minutes. It looks like the NASDAQ is down 48 and bouncing up a little bit. So now what I'm going to do is I'm going to go through what I would do at the end of every day to set myself up. But before we do that, I've already done this for last night. These are my short trades that I would like to look at shorts today. All right. So it'd be corn, cocoa, ABT, BSX, COST, DR, PGR, and UNH. The longs I want to look at today are these right here. The 5-year, copper, soybean, well, that one's didn't close above, so I can't trade that one. 10-year, COO, FAST, IR, MDT, Newmont, NWL, ORLY, TMK, TSO, and Whirlpool. So when I'm going through this, I have two separate distinct lists of things. I have a list of long things, okay? Now, I build this list every day, and I clean it up every day, and I update it every day. I have a list of longs. Now, there's three components in the long. So write down long, L-O-N-G, real quick. I'm going to have swing longs, which are longer term investments like Amazon. Okay, so in this example right here, Amazon for me is a longer term swing long. And you're going, oh my God, you're probably getting killed on Amazon. No, I'm long Amazon at $75. So for me, a longer term swing trade, you can see that Amazon's still doing just fine. It's way above $75. So it's okay. I can take the little heat from 2,000 down to 1,500. I can handle it. So I'm going to have a swing long, which is an investment type trade. Then I'm going to have a list of continuational longs, which are going to be shorter term than an investment, but longer than a day trade. So these are going to be swing trades right here. And then the new longs are going to be the new longs that I just found last night. Does that make sense? So I've got a long pillar silo, and in my long silo, I have an investment. I have a list of swing trades that I can pick from, and then I have new fresh longs that I can pick from. And I have the exact same thing set up on the short side. The short side, I have some investment shorts, so short bonds, okay? Continuational shorts, which should continue to break down lower and can make me money over the longer term too. And then I've got the new shorts, okay? So what I do every day is I come in here and I go like this right here. So we're going to use a daily chart for this example. And then I go like this right here. So what I first do is I come in here and I go, all right, let's take a look at the index futures. So in this case scenario, can you see where the S&P dropped below the cloud right here by 1 bar? That is an aggressive sell signal. This is a medium, all right, and then that's a conservative. So 1, 2, 3 bars. I'm going to put that line up there so you can see it. Everybody see that on that third bar right there? That's a short signal. Well, you could have shorted it on the first, second, or third. I tend to like to either go on the first or the third is my particular setup. So just by what you know right now, is the S&P, is it a hell yes short or a hell yes long? Or is it a, oh my God, I don't know what's going on right there? Which one is this, like in, as far as Ichimoku goes, should you be long or short this creature right now? Yeah, so where you reckon I should put that thing at? I should put this in my short continuation list of things, right? So that's what I would do. Now, as far as the futures markets go, I don't really have to put those over there because I'm trading. I do those scans every single day, and I'm always scanning the market, so I always know what phase in the market that I am every single day. So S&P looks good to the downside. It's weak. That's a good short. Now, if I want to drill down into smaller time frames, I can say that the 10-minute is below the cloud. Now, how far did we say that was going to look in the future? A 10-minute was saying, all right, we're probably going to have 4 hours of down move on the S&P 500. So when it broke right here, I should have 4 hours to play the downside. All right. Now on the 60-minute, what did it say on the time frame analysis? If I break a 60-minute time frame, I'm good for how many days? At least 3. So there's 1, 2, 3. All right. So just keep that in the back of your mind. You don't have to just use dailies. You can also use those time frames and mess with a little bit smaller time frames. All right. So from here, I'm going to go back. So S&P would be a short. What would the YM be? With the YM, this is the Dow Mini. Is it a long, short, or leave me alone? It's a short, right? It's going lower. It's down 171 points already today. It's going to go right down here to 24,000. Super simple, right? Now check this out. I know you're going to say this looks too easy. Notice how this broke 1, 2, 3 days below the cloud. All right, 3 days below the cloud. And then it went back above the turning line, went back to the standard line. Notice how the belly of the beast held it, overhead resistance, and then it broke, and now it's going lower. It is a super easy strategy to keep yourself on the right side of the prevailing trend until it shifts. So until it shifted recently, right? Like this right here, this was easy right here. That was easy. Okay. The shift right here is where you get chewed up a little bit. And then now this is easy again. When it's doing this type of stuff right here, this is where it's kind of hard to trade. And there's nothing that can avoid chop, nothing at all. So what I try to do is I try to stay on the right side. If the market is above the cloud, I'm going to try to stay long. If the market is below the cloud, I'm going to try to stay short until that shifts. So on the Dow, I'm clearly bearish, right? Well, what about the Russell? The Russell is still a short. It's going to go lower. It's probably going to go below 1450 next week. That's pretty simple. What about the NASDAQ? NASDAQ's been super weak. Look at there. Look how easy that is to figure out what's going on with the NASDAQ. Sell here, sell here, sell here. Let it bounce up, close back below the turning or the standard line, and now it's just collapsing on itself. Pretty simple, right? All right, that's that. Let's take a look a little bit at international flare. Nikkei. Nikkei is a short. It's below the cloud. Now I'm going to go to the DAX. The DAX, is it a long, short, or flat? It's a short. It's going to cruise lower. So I want to short that thing. What about the Euro Stoxx 50? Euro Stoxx 50, also a short. See how clear it gives you signals once you know what to look for? We are below the cloud. We're cruising lower. Those are good shorts. Now let's take a look at the Bund, the German Bund. Ooh, look at there. What is that? Is that a long or a short? In this case scenario, what are you? Long, short, pass? That's a long, right? It cruised above the cloud here, pulled back, touched it again, and now we're taking out these most recent highs. That's a long. It's clearly going to want to go right back here, break that, and go back up above 162. Pretty simple, right? Now, if the Bund is moving higher, that probably means that our 30 and our 10-year are going to move higher. So let's go take a look at our 30-year note. All right, 30-year note. Is this a long, a short, or a pass? For me, anytime the price action is in the cloud, it's a don't touch this. It's an MC hammer trade. Don't touch this. So since it's in the cloud, it's hands off for me. It's a pass. So I'm just not going to trade it. I'm just going to leave it alone. I'm going to wait until it makes its mind up, and then I'll go with it after that. There are plenty of other things I can trade. All right, let's take a look at the 10-year note. 10-year note, long, short, or pass. This is a decent long. I've got 1, 2, 3, 4, 5 days above the cloud. Now, the lagging line has not confirmed it yet, so it may be a short-term long, but that's okay. It could potentially go as high as 120, maybe even 120.16. So that's a decent long there. All right, I'm going to keep on rolling down here. All right, now we've got gold. Is gold a long, a short, or a pass? Do you combine candlestick signals with the cloud? Yes, I do. So this is, it's a long, but it's kind of sideways, right? So for me, gold is a long, but it's not really doing anything, especially when you think about how the markets are supposed to work. When you get a lot of fear in the markets, a lot of people should be piling into bonds, gold, or crypto, and they're not yet. So the sell-off is nowhere near being done yet. Ideally, when the market sells off like crazy, you want to see a lot of people go into either cash or pile into gold, bonds, and cryptos. And they haven't really done that yet. So you would think that gold would be rallying really, really hard, but it's down $3.50 today. So it is technically a long, but it's not a screaming long because it's not really breaking away from that cloud. Okay. All right. Okay. Let's see here. That's gold. Let's take a look at silver. And then I see a lot of you guys asking questions on particular instruments. What I'll do is if you guys let me do my scanning homework real quick here, what I'll do at the end of the presentation, you guys can give me symbols and I'll take a look at them. All right. What's silver? Silver, a long, a short, or a pass? Looks like a better short to me than anything. So silver's a short. Let's take a look at copper. Copper is a decent long. It's kind of flatlined. Platinum is a good long with a stop of area of 833 and a target of 900. Crude oil. So can anybody guess why I told my members once we broke the cloud here, and I said, all right, here's target 1, target 2, target 3, target 4. Look at there. It hit our 4th target today. Look how simple that it was. And heads up, we were long from $40. We were long from $40 back in here. Okay. When it broke above the cloud. See this right here? See how we got long crude oil right in here? and we held it all the way up until here until we broke really cleanly. And now we're short, and then we've got those targets. Pretty simple, right? This is not hindsight bullshit. You can really do this. It is not hard, okay? Do I look at the ADX? I do look at the ADX, but I can't get into it just because I only have so much time to talk about it. So I'm trying to just focus on one technique. I usually use the ADX as a filter. If it's above 20, I know it's trending. If it's below 20, I know it's non-trending as far as a power gauge. But yeah, so it's simple. It's simple to easy use, right? This is a free indicator. You don't have to buy this indicator. It should be freely available on all your charts. If you don't have a good chart vendor, cancel that chart vendor and go find somebody that has Ichimoku. This is just TradeStation, but almost every chart vendor out there has Ichimoku. All right, so that's crude oil. What's heating oil doing? Is it a long, a short, or a pass? It's a short, right? Super simple. That's just a clean short. All right, let's take a look at natty gas. Natty gas. All right, back here was a decent long. Then it went back below the cloud, then back above the cloud, and then it went vertical. Natty gas is hard to trade, so be careful. It'll rip your face off. But it's a good long. It's probably going to go back to $5. Now, we're getting it out of the energies. Now we're going to go into the meat market, okay? We're going to go feeder cattle. What is feeder cattle? Long, short, or pass? Sorry about the sniffling, guys. Yeah, it's a pass. I don't have to force wanting to be in feeder cattle right now. I'm like, no, my rules say leave it alone. All right, well, what about live cattle? Live cattle, also, no sense of me thing. Yeah, I'm talking about futures. I'm getting ready to talk about stocks in just a second. Live cattle today is a pass. Okay. Lean hogs, little bacon. Everybody loves a little bacon, right? Whether it's good for you or not. So bacon, lean hogs, is a good long with a stop of either 58.32 or 56.35, depending on what your risk you like there. Target's going to be 61.48. That's a long. So what I do is I compile that stuff and I take it from, and I go over here and I go, okay, that's a long. And I would come over here and build up my long positions, right? And then I've got my new longs and I've got my new short situations. So from there, now let's go to the grain markets. Rough rice. Rough rice is a pass. Does everybody agree? So your job as an aspiring professional trader is to first figure out what looks really good long, what looks really good short, and leave all the rest of the garbage alone. This is a pass. All right, bean oil, soybean oil, that's a short. Next target, $2,600 or $26. Let's take a look at corn. Corn is a brand new sale. So this would be 1, 2, 3 bars, 4 today. So I've got 4 bars below the cloud. That's a fresh short signal. So what I would do is I'd come over here and go short tab, and I would add it to at C. You see, I did that 3 days ago. That's why I'm saying that was in my new short position, because it just crossed below the cloud 1 to 3 bars below. All right. Now I go back over to my scan page, and then I go soybean meal. That's a short. Wheat. That's a short. Oats. That's a long. Now on oats here, I would let it drift down to the top of the cloud before I would buy it. Okay. And then let's go to the soybeans. Soybeans is a fresh long. It's above the cloud. It's a sideways because the ADX is too low. See how the ADX is 13? I need the ADX to be slightly above 20. I'm just using the standard settings. A lot of you guys are asking me what my settings are. I'm just using the standard settings of 9, 26, 52, 26, 1, 26. It's just the standard settings on Ichimoku, 9, 26, and 52. Nothing elaborate. All right, where are we at here? All right, let's do the softs, and then we'll do stocks real quick, okay? All right, now, the softs. Cocoa. Okay, what do you think I added to my fresh short position of, hey, pay attention, cocoa is a new fresh what? It's a new fresh short as of day before yesterday, right? So it's been a short for 2 days. So there's your fresh short right there. So this is how I build my scans every day. And then I'm going to go, okay, well, what about sugar here? What is sugar? Well, sugar is in the cloud, but I'm looking for it to hold that cloud and potentially buy it. So I will watch it closely today. What about coffee? Coffee is what is that? Look at that. It's just happening right now. That's right now. This is in real time. Coffee is a fresh short. It'll probably break down and go down to $100. All right. Cotton. What's cotton? It's a short that's going to grind lower to $75. What about OJ? OJ is going to, well, it's a short, but it's going to bounce either to the bottom of the cloud or the top of the cloud. So I'm going to leave that alone until it either fails here, here, or here. Once again, guys, sorry about the cough. Can't do anything about it. All right, now, watch this little trick here that I can do in TradeStation. You can do this in a lot of other platforms too, but watch. Do you see where it says S&P 500 right here? 505 things. I'm going to double left click. I'm going to go click, 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 click. Now, check this out. What I'll do is it'll go new below, new below, new below, new above, new above. So what I'm going to do is I'm going to go ABC is a new below. Now, look at this chart. Is this a hell yes, long, short, or ooh, leave me alone? So in this situation, I would just leave it alone because it's sideways. Even though it broke below the cloud, it's kind of lame, right? You're like, yeah, leave my ass alone. Don't touch this, right? So just use that. All right. Now, all right. So now I've got new below. Now I've scanned through 500 stocks today with the click of 2 mouse clicks. And now I know I've got, these are all new below and this above right here. So I'm just going to go through those. And this is how I would do it if the market was closed at the end of the day. And then I would go, all right, AXP was in the cloud. Let's see here. What's it trying to do? So American Express is trying to close below the cloud right now. Now I need to wait until the day is closed when I do this, but I'll have no problem doing stuff like this live in front of you guys. So American Express is probably going to be a good short. Okay. New below. CB. All right. There's a new fresh short right there. Okay. And then I come back over and I keep doing it. Make sure I'm looking for decent stuff. CMI. CMI it's a new fresh short. It's not great looking, so I wouldn't add it to my list. Okay. And then I can look at Ford. Ford. All right. So Ford is a fresh short position. Okay. Right there. Now, clearly I have to wait until the market closes in order to make these guaranteed, right? In other words, they have officially closed. But FE here, FE, that is a fresh short signal. So does everybody understand what I'm doing and how I'm doing? In order to find new shorts and new longs on a daily basis. And then I build these over time and I just build my portfolio and go, oh, these are long-term shorts. These are brand new shorts. So today, if I know if I've got a short day, I don't have to go, oh, what should I short? Because I've already got a list of stuff I can play with. All right, let's take a look at some of the new aboves here. We got one. There's new above. ALL, new above today, breaking away to the high side. COL, breaking away to the high side. And CPB, I wouldn't trade this one just because it looks a little sideways to me. But overall, that's the process that I go through in order to do that. Okay. Now, I've got some time here. I really don't have anything to offer you today other than I'm doing a webinar next week that I'll let you sign up for. I think it's next Wednesday. It's called the 1% Club, where I'm gonna share with you how I've been able to, in the last 3.5, 4 months, make a little less than 1% a day every single day, even on Saturday and Sunday, ladies and gentlemen. So it's been paying me 0.75% on a little secret unknown trading account. And it doesn't take a whole lot of skill, but it does take you knowing how to open up this secret account the correct way. I'm going to give you a link to that. Does anybody have any symbols you want me to look at really quickly? I got 10 minutes, and then I'm going to introduce Johnny and turn it over to Johnny. Let me see here. What indicator are you using? Radar screen showing the new... That is just Ichimoku right there. That's all that is. Ichimoku. All right. Tesla, TSLA. Well, what's the link to the webinar? Let me grab you a link here really quickly, and then I'll do this. I'll try to answer as many people as I can, guys. Sorry. And like I said, sorry about the sniffling and the coughing. I'm on the back end of a cold here, and it's eating me alive. All right, there's your link. I'm going to put it in the chat box, too. There you go. So Tesla would be a long currently, but it's probably going to drop below the turning line. It's probably going to go back down here and visit the 309 of the standard line in the cloud. 1% Club futures. No, it's not futures or stocks. No, it's neither one of those. Neither one of those trade on Saturday and Sunday. All right. Amgen. Let's take a look at Amgen. AMGN. Amgen is a good short. It's probably going to bounce back up to 1564 and then go back below 20 or 1400. The link is, hold on. Let me see if I can send you the link again. It should be in the chat box, but there, I'll send it to y'all again. Oh, what is your custom indicator? This is just Ichimoku. Does this work on options too? Yes, it does. So NVIDIA NVDA. NVIDIA is a short. Our next target on NVIDIA is going to be 95.63. NVIDIA is a short. Walmart WMT. Sorry guys, you guys are giving me more symbols than I can handle all at once. Walmart is a fresh break yesterday. So Wally World's probably going to get smoked to the downside in the near future here. It's right now a fresh sell signal with 3 bars below the cloud. You just need to wait for today for it to close below the third one there. Intel INTC. If I haven't got your symbol really quick, just keep on doing it. I got 9 more minutes here. How are you estimating targets? It's a combination of support and resistance and my risk to reward ratio, is how I'm doing it. Intel is in the cloud. I would pass. TWTR. Twitter is a long, okay, with a tight stop loss of, let me grab this real quick. Tight stop loss of 20, well, let's call it $30. And your next target would be, this most recent high, at 35.58. Apple, AAPL. Apple is a short with a stop of 186 and a potential target of 160-ish. GOOGL. Google is a short with a stop of 1,067 and a target of 950. NEM is a fresh long. The stop would have to be 32.32. Target would be 36. TNDM, that's a tough one, is a short with a stop at 35.25 and a target of $22. NFLX, Netflix is a short with a stop of 276 and a target of 200. Can we make a little bit of money short swing from below the cloud to the cloud? You talking about like doing from a bounce from here to here? Yeah, you can. It's harder because it would be a week long. Yeah. Any longs? Yeah, I showed you a couple longs earlier. Here, I'll filter it again for you. Here's new above right here. So you got CPB, and then you got COL, and then if you want a list of my longs, here's a list of my longs I found the other day. So the 5-year, copper, soybeans, not yet, or not soybeans, but sugar is almost along. The 10-year, COO, FAST, IR, MTB, NEM, NWL, O'Reilly, TMK, TSCO, and Whirlpool. There's your some longs. How about currencies? Yeah, you throw them out there and I'll look at them for you. How are you coming up with targets? Looks like you're picking them out of thin air. No, I'm looking at support and resistance. And then I'm also figuring out what my risk to reward ratio would be. So I'm calculating. I'm just doing it in my head. I'm not making them up. I'm just looking for good support and resistance areas. And I'm also figuring out, hey, if I'm risking 1 point, I need to be going for at least 3 to 5 points. Yeah. You got it. Okay. All right. Amgen, AMGN. Amgen is a short with a stop of 198 and a target of 180. How are you using the ADX indicator? I can't get into it. It's going to take too long, and I only got 8 more minutes. Sorry. HON, HON. HON is a short with a stop of 148 and a target of 135. AXTI is a short, about to break $5. A stop of 540, 546, and your next target will be $4. MSFT, Microsoft, is a short with a stop of 105 and a target of 98. All right, it looks like I have got 7 more minutes. Keep feeding me these symbols. I'm going to give you the link here to the webinar on the 1% Club. Now, I call it the 1% Club not because I'm making 1% a day. Close, 0.75%. It's just too hard to say 0.75%. So we just said, hey, let's just round it up to 3%. Here you go. There is the link if you want to register for that webinar on next Wednesday. It's in the chat box. All right. Will there be a recording of this? Yes, Jeanette is recording. Amazon, AMZN. Now, full disclosure, I'm a long-term investor of Amazon. I'm in at $75. It's a short. It's a short with a stop of 1652 or 1564, depending on your risk. And then its next target is going to be clearly right down here at around 1352-ish. When is the webinar? It is Wednesday at 8 p.m. All right, helpful or not? Just give me some feedback here on the presentation. Do you think you can use this if you start filtering things for new above the cloud, new below the cloud? And then what you can do is you can kind of incorporate stuff like, the multi-time frame analysis. Then you can get into, daily, hourly, 10 minutes. Like, I know this is going to be good for a few weeks. I know this is going to be good for 4 days. I know this is going to be good for 4 or 5 hours. So you should be solid. All right. How do you use the forward cloud as a directional? Thanks. Like this right here. You see how Amazon, you see how the cloud is pointing lower? You see how the angle of attack is lower? That's telling you that Amazon's future prices are going to continue to drop for you. So that's how it's giving you that future predictive thing. Now, here's the thing. You see how it went from up to a down move? Notice how the cloud was up and it went from this color to that color. When it shifted over right here, that was like, uh-oh, party's over. Shoo, and then it drops like a stone. Even having Amazon at 75, are you holding it as it drops and why? Yeah, because it's a long-term investment, Anthony. And then what I'm doing is I'm looking at a longer time frame. So I'm not trading it off of a daily. So if you look at it like on a weekly, I still have support. And I've been in it for longer than weekly charts. I'm actually in it on a monthly chart. So I'm in it down here. So it could drop all the way down to 1,000 and I'll be okay. Now, if it drops below 1,000, I could get the hell out of Dodge. Are you showing us the daily time frame? Yes, I'm showing you. This is a monthly time frame on Amazon, and now I'm going to show you a weekly. And then what I'm normally showing you on charts here is daily, just because it's easier on me just to deal with the daily chart across all you guys' examples. My standards, my settings are the standards. Yes. SHM, SMH, SMH. Okay. That's a short with a stop of 95 and a target of 85. Why don't you take profit at 2,000 on Amazon? Well, that would be very hard to do, Bree. Why don't you take profits at 2,000 on Amazon and then rebuy later? Well, okay. Let me give you a question here. AMZN. Do you think I would be able to buy Amazon back at $75? I don't. So that's why I'm not. Now I could do it around a different trade in a different account. I can short Amazon in a different trading account because I've got 6 different trading accounts. So I can do that. And it's also a very effective way for me to hedge around that position. I can also do options and stuff like that. Or I can just short futures and I'm hedging Amazon when I'm doing that. Basically the same thing. And I can still keep my long-term hold position that I've got in Amazon. But I don't think I'll be able to buy Amazon at 75. So if I buy it at 75, flip it out at 2,000, and then try to rebuy it, That's a tough game to play, man. It's hard. It's very hard to time every little subtle nuance of the market. Like, get in here. People don't realize how hard that is actually to do. It's very, hear me say it's a short here and it's a long here. And I just also didn't say, hey, it's a long here and then it's a short right here. I didn't say that. So I'm always missing usually the first 15 to 20% of the move, and then I get the meat in the middle. Yep. SDS. SDS is a long with a stop of 38.01 and a target of $44. All right, let me introduce Johnny. All right. Okay, I'm going to turn it over to Johnny. Now, Johnny is one of the few guys that actually trades his own stuff, like myself. And I know recently he has called the market crash back in January and then again in October. So very cool stuff. And he has a really cool methodology of combining fundamentals with insider informations and also technicals. And I know you're going to enjoy his presentation. Once again, guys, I'm going to turn it back over to Jeanette and Johnny. Sorry about all the coughing and the hacking and the sniffling and stuff like that. Like I said, I'm a little bit under the weather. Hopefully you enjoyed the presentation. I don't really have anything to sell to you or offer to you other than a webinar that we are doing next Wednesday on the 1% Club, how I've been able to make 0.75% every day for the past 3.5 months, like clockwork. There you go. I'm going to send you that. If you want to take advantage of that, you can come watch us do that one. Good luck. Hope it helps. Have a great Thanksgiving holiday. Be careful on the roads out there, and I'll see you guys on the videos.